Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, the derivative data of Nifty, Bank Nifty, as well as of the different asset classes. Now, first of all, a general disclaimer: this video is just for educational purpose. This is not any recommendation. Consult your financial advisor before investing. Now, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that after Nifty broke out and all the indices broke out from their lifetime high, they rallied very sharply, which was in the sense of a sharp short covering. But last couple of days, what we have seen, and we have mentioned in our last video, that already on the lower degree time frame, some sort of exhaustion was seen. Market went slightly overbought or entering into overbought, and we might see some sort of profit booking in the higher levels. And exactly for a couple of days, I mean to say Monday and Tuesday, market traded sideways with positive bias, and after that we have seen that some sort of exhaustion was seen. There was lack of follow-up buying, and on Friday we have seen that profit booking came in and market ended on a negative note. So this looking at this particular price momentum, we feel that some sort of profit booking or some time correction cannot be ruled out, and we might see some sort of cool off or some pullback before the start of next upside rally. So friends, now let us check out the Nifty daily charts. On the Nifty daily charts, Nifty has been moving. It has given a lifetime high breakout. Some sort of exhaustion was seen, and after that, we have been slightly cautious last week, and you can clearly see this. Let me stretch the chart so that you might have a clear view. So you can clearly see that till Thursday, markets were trading with positive bias, with lack of buying, and then on Friday, we have seen a sharp sell off coming in from the higher levels. And you can see the RSI. Most important thing I would like to highlight here is the RSI. You can clearly see from the overbought region of almost 79 or 78.5, there was a weakness, and there was a negative crossover from the above, which means that already the price market was witnessing some sort of overbought uh, region, and we might see some sort of profit booking coming in at the higher levels, and that what we have seen. And last week we have also already mentioned about that there was strong uh, put writing, and because of that, implied volatility went into some sort of risky zone, and that implied volatility might bring in profit booking at the higher levels, and exactly that happened. So we had a target of 19,500. It tested the level of 19,523, and then we saw some sort of profit booking coming in at the higher levels. Now, one more important thing which I would like to highlight is that uh, just look at this horizontal blue line. Now, on December 22nd, 1st December 22nd, the high was 18,866. After that, Nifty corrected and made a low on uh, 20th March 2023. The low was 16,828. And after that, again, we have seen Nifty rallying and breaking the lifetime high. Now, this valley is almost what we call as the deep correction of 2000 points. So the overall target of the Nifty from this breakout point, which is 18,800 mark or 18,900 mark, we should add 2000 point from those levels. So almost long-term targets in the Nifty are coming around 20,800 to 20,900. So the primary trend is bullish. Yes, a pullback or a correction or profit booking cannot be ruled out, but that profit booking should be used as a buying opportunity. And you can clearly, if you have seen that in the recent past, FII has also aggressively become buyers in our markets. So even they are bullish on the markets. So definitely, we at this juncture we do not see any major correction. Yes, some sort of cool off cannot be ruled out. So friends, now let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed at 19,234. Below that, the second support is placed at 19,076, and below that, the third support is placed at 18,995. On the upside, the first resistance is placed at 19,440, second resistance is placed at 19,523, and third resistance is placed at 19,650. These are the important supports and resistance level in Nifty, and traders should just watch out these levels. Look out for where Nifty is taking a pause. Yes, some sort of follow up, sell off, or fall off profit booking cannot be ruled out. Any pullback in Nifty might bring in profit booking at higher levels, but uh, one should wait for some decent correction and then try to enter long at the lower levels. So at least most probably we feel that Nifty might take a pause around say 19,076 mark, and then from there we should look out for market to consolidate, and then if there is an start of upside leg, then one should try to create long positions. So friends, now let us discuss what we have observed in Nifty call data. Let us analyze the Nifty derivative data. In Nifty calls, the action was seen in 19,400 calls, 19,500, 19,600, and 19,700 calls. Now here you can see the implied volatility is low. Smart money has already into aggressively writing out of the money calls. You can see a significant drop in option premium. There has been a rise in the open interest, rise in the volume. So on immediate basis, we feel that 19,400 could act as a major resistance, and above that, the major resistance is at 19,500. So at least for next week, 19,500, which is the recent swing high, 19,523, we feel that that will not be breached on the upside, and we might see some further profit sell off or correction from these levels, because you can see the concentration of volume at 19,400 and 19,500. Major concentration is over there, and even you can look at the open interest. So at this week, most probably 90% we feel that it is difficult for Nifty to break 19,523. This is what the data is showing. But the implied volatility is low. But still, we will go with the smart money, which are into writing aggressively the out of the money calls. So some sort of profit booking from these levels cannot be ruled out. So now let us watch out Nifty put data. In Nifty put, the action was seen in 19,300 puts, 19,200 puts, 19,100 puts, and 19,000 puts. Now here you can see implied volatility. IVs are between 10.22 and 11.08. Here there is rise in the volumes, rise in the open interest. In some strike prices, maybe in 19,200 puts, there has been shedding in the open interest. That means uh, some sort of profit booking inputs was also seen at those levels after we saw some sort of correction on Friday. But most probably, what we see that on the downside, immediate basis, we feel that 19,300 could act as an immediate support. After that, 19,200, where there is some sort of open interest shedding. So if it breaks 19,250, then Nifty might drift down to the levels of 19,100. So most probably the strong support on the downside would be 19,250, purely based on shedding of the open interest. But that doesn't mean that it cannot drift down to the levels. There can be extension of the downside leg towards 19,200. But most probably you can see there has been buying in the Nifty puts. Most particularly till 19,200, the volumes are rising, the open interest is rising, and there has been a rise in the option premium also. So maybe most probably 19,200 could act as a major support, and if it breaks, then possibility of 19,100 to 19,076. So looking at overall data of Nifty calls and Nifty puts, we feel that 19,200 could act as a immediate support, or there could be extension till 19,150. So between 19,200 and 19,150 should be the ideal level to go long at the lower levels. So now friends, let us check out Bank Nifty uh, charts, Bank Nifty daily charts. In Bank Nifty daily charts, similar kind of trend was seen. You can clearly see there has been a flag pattern breakout. I will show you. This is a flag pattern breakout. After that, we have seen extension of rally. Again, we were cautioned at higher levels that one should book profit in Bank Nifty also. There was lack of follow-up buying in Bank Nifty, and on Friday we have seen that particular trend was broken. Again, a pullback from these levels, maybe of 700, 800 points from this level cannot be ruled out, but that should be used as a buying opportunity. And as I said, the larger degree trend seems to be positive. You can clearly see the flag pattern breakout, and maybe in long term, Bank Nifty has potential to test the levels of maybe 46,500 to 47,000 in long run. So any dips should be used as a buying opportunity, but at these levels, one should be cautious while going long, or those who are still long should try to book profits and wait for some sizable correction. So, friend, now let us discuss the important supports and resistance level in Bank Nifty. The first support in the Bank Nifty is placed at 44,747. Second support is placed at 44,444. And third support is placed at 44,163. On the upside, the first resistance is placed at 45,162. Second resistance is placed at 45,418. And third resistance is placed at 45,655. So these are the important supports and resistance level in Bank Nifty. And traders should just try to watch out these levels closely, and look out for supports in Bank Nifty. Let Bank Nifty to consolidate or take a pause after a sizable correction, and after that, if there is a leg of upside rally, then one should try to create long positions at the lower levels. So at this juncture, the view is just book profits, wait for some sizable correction, and then enter long at the lower levels. So friends, now let us analyze the derivative data of Bank Nifty calls. In Bank Nifty calls, the action was seen in 45,200 calls, then 45,500 calls, and 46,000 calls. Now here, what the important thing which I would like to highlight is a significant drop in option premiums. The smart money is already into writing strongly, are into writing the out of the money calls. You can clearly see implied volatility is between 9.64 and 11.23. There has been a rise in the open interest. There has been a rise in the volumes. So from here, on immediate basis, for 45,200 could act as a major resistance. If it breaks, then most probably there are chances that there could be an extension of rally towards 45,500, because here on immediate basis 45,000, there is a large chunk of volume concentration and open interest concentration, but it is the Nifty has slightly closed below those levels. So if there is a pullback, then there are chances that a pullback could be extended towards 45,200, and from those levels we might see selling pressure coming in at those juncture. So one need to be cautious. Those who are long should try to book profits and wait for some correction from the current levels. Friends, now let us discuss what we have observed in Bank Nifty puts. In Bank Nifty puts, the action was seen 44,700 puts, in 44,500 puts, and 44,000 puts. Now here you can see there has been a rise in the volume, rise in the open interest. Implied volatility is between 12.44 and 13.82. So you can see there has been a rise in the option premium also. So this is indicating that smart money might have started buying out of the money puts. So maybe most probably from these levels, on immediate basis, looking at the volume, open interest concentration, we feel that 44,700 could act as an immediate support, and below that, if it breaks, then 44,500 could be the next immediate support. So maybe from these levels, maybe 400-500 points or 600 points of correction cannot be ruled out looking at this derivative data, but on charts, maybe 700 or 800 points of correction cannot be ruled out. So most probably, if we look at this particular data, 44,500 could act as an immediate support for the support for the next week. If it breaks those levels, then chances are that Bank Nifty might test the levels of 44,200 mark. So most probably, looking at the charts of derivative data of Nifty and Bank Nifty, the view is one should slightly be cautious at higher levels. Those who are long should try to book profits at the higher levels. Do not go long or avoid trying to go long in indexes. Wait for sizable correction and then enter long at the lower levels. So, friends, now let us come to the final segment of our show, which is positional idea call. I've identified one stock. The name of the stock is IGL. Let us check out the charts of IGL. Indra's gas. Indra's gas has been moving into an upward rising channel, making higher tops, higher bottoms, and the stock has been in an upward trajectory uh, with positive bias. Now let me draw. Let us take it to the weekly chart so that we will have a larger degree view. So let me draw an rising channel so that we might have a clear view about the particular trend in the stock. So now this is the rising channel which the stock has been maintaining since a long time. RSI is positive on weekly charts. On weekly candle is also a strong bullish candle. Volumes are also rising. You can see, uh, and the trend is positive. And even if you can check out the stocks of the gas stock, maybe MGL or Gas Authority of India, in the last week, all the stocks of oil and gas were bullish. So the momentum in this particular stock, that is Indra's gas, is also bullish. So momentum might pick up from these levels in short to medium term, maybe for next 4 to 5 months. So definitely, the stock is looking positive. Now let us go to the daily charts. This is the daily charts. The stock is into a positive momentum. Now, long-term investors as well as short-term investors, positional traders, swing traders can watch out this stock. The stock has potential, uh, a good potential from these levels. Currently, the stock is quoting at 495. Investors can accumulate or traders can accumulate the stock on dips to 485 for an upside target of 545 in short to medium term, maybe most probably next 4 to 5 months. So maybe 10 to 12% of upside from these levels cannot be ruled out. Yes, stock might see some sort of pullback, but that should be used to buy or accumulate at the lower levels. So this stock should be in ideal portfolio, at least for short to medium term. And even if it breaks or if it sustains above this particular rising channel, then in long run, maybe in next 12 to 18 months, the stock has potential to test the levels of 5-600 also. But we will take a short term view, at least towards the levels of till the levels of 545 on the upside. So friends, thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.